Hey everybody, welcome. My name is Carl Krauskopf. I am the owner of Gold MF, and we are here to talk about Eastmont Developers, a 33-unit townhome community in Wenatchee, Washington. A really exciting opportunity for you to be a partner, an investor, a community changer in this great value add opportunity. Today we'll talk about the business plan, we'll talk about the leadership, the market itself, the financials, and the investment overview. We'll go into some of the details as well on the financials on the back end, but again, we're really excited that you're here. Thank you. Quick disclaimer, I am not a CPA, nor am I an attorney, so please do your own due diligence. I've uploaded all of the pertinent files into the deal room, so please find your way over there and do your own due diligence. Contact information. Look forward to speaking with each one of you and answering any specific questions that you might have about the deal. Now, one thing I want to start off with is investing in our values, right? Don't simply invest in real estate. Invest in the values that improve the real estate. Invest in the operator's values. Now, what are our values at Gold MF? It first and foremost starts off with growth. Being better than yesterday is our foundation. We are obsessed about the work that we do. We are passionate about it. We love our jobs. We love the value we bring to everybody that we work with. Love is the everlasting constant. This is our true legacy for our employees, our tenants, and our investors. We're driven. We're constantly pursuing excellence, whether it's working with tenants, working with our clients, working with our contractors and partners out in the market. Again, we are driven and constantly pursuing excellence. We're here to impact 1 million families through housing services. And we focus on flourish. We focus on investing in our people's health, our employees' health, their well-being, their professional and their personal development. Now, before we get into the deal, I want to talk about where I started. Again, my name is Carl Krauskopf. I spent 10 years in corporate strategy. I was a chief of staff for a healthcare company. And I had a very, very focused skill set on growing top-line revenue and implementing cost-cut initiatives. Now, this skill really parlays well into the realm of multifamily investing. But before that, where did I begin? I began with a small multifamily. This was a purchase, my very first investment property purchase, a small multifamily, a duplex. And I had no idea what I was doing. I got in over my skis, but what was really important about it is that it was my first deal. It was my first deal that I got in. I really understood. I had time that I could go in, analyze, find this deal, work on it, stabilize it, and it was a lot of work. It took a lot of time from my family. It took a lot of time from my job. But again, I'm here now. I'm glad that I did this. Learned a lot of valuable lessons, and it really come for full circle on the multifamily side. We'll talk about that in a second. Now, moving on into the residential space, I really perfected residential remodels over the course of 30 single-family home flips in the Puget Sound or the greater Seattle region. Now, it ranged from cosmetic flips to what quickly became full studs-out gut remodel jobs, and it was tough. I'll be honest, it was tough. Again, having a full-time job, a family, and being able to scale a single-family flip business was a challenge. So I started getting into the ground-up development where I would buy a permitted townhome and permitted sites all along the Seattle corridor. And I would, again, work with partners, work with investors, pool capital, hire the contractors, manage the contractors, return capital. We did really, really well. Moved into the detached ADU space, again, building more ground-up construction over the course of the next year or so. And we made our first purchase of a 30-unit apartment complex in Wenatchee, Washington, same city as the Eastmont Developers asset. The Evergreen Court Apartments is a 30-year, it is a 30-unit, 95-year-old apartment complex that is stabilized and spitting off cash flow, which is great. We love it. It's a great property. has certainly formed a lot of really great relationships with our contractors, with our property management company, and really has proven out this model and has proven out this market. Now, we close on another smaller multifamily 12 unit in the city of Seattle. Great property as well. We're working to stabilize that. And now we're going to be talking about Eastmont Townhomes. It's a 33 unit all townhome community built in 1977. We'll go ahead and jump into some of the investment offering details. So again, what I'm really excited about this particular property is that we're getting in at a low cost basis, a low dollar per square foot basis, and we have great path towards a value add strategy. And we'll talk about that here in a second. Some of the investment highlights, again, a location. It is right off of the commercial corridor in a residential area. So it's really, really well located, well positioned near these amenities, but it doesn't feel like it's in a commercial zone. It really, truly feels like it's in a residential zone. So the tenants do have that great suburban feel with great access to high quality amenities. We'll talk about the amenities, including parks, AAA retail, AAA groceries, great amenities around this facility. Heavy value add, discounted asset. Again, we're going in at less than 50% of the replacement cost. Raging rental demand. We know this because we are already operating in this market. The actual units at this facility are 40 to 60% below market rent. And again, like I said, this is an existing market for Gold MF. So we do have those relationships already in place. Address 450 6th Street, Northeast, East Wenatchee. One thing to make mention that I want to say is 1,550 square foot average size units. These are big townhomes. The average market rent per square foot, $1.38 compared to 85 cents what they're currently getting right now. So a lot of headroom that we can go in, capture with some of the value add that we'll talk about now. The interior renovations, right? This is going to be really a dropship approach where we're going to be going in. We're going to be renovating at least four units at a time. We're going to be bringing in the full supplies, the contractors all at once, and really being able to leverage economies of scale on this property. We feel confident in the rent increase. We feel confident in the construction costs on this as well. Why? Because this is a market that we're already operating in. Class A amenity package, right? We're going to be going in. We're going to be adding amenities that will allow us to compete with the newer development properties at a fraction of the cost, right? We're going to be going in. We're going to add a playground. We're going to add covered parking, covered grill, community area for people to congregate and gather. We're going to be adding off-leash dog parks. Why? Because this is a huge property, just over an acre of land and a large courtyard in the middle that has a ton of untapped potential. I mentioned covered parking. Now, I want to explicitly carve this out and talk about it for a second. This is going to be one of our first initiatives in terms of the amenity package. Why? Because we're going to be able to directly charge a fee for covered parking. Not only that, but it is an absolutely highly valued amenity in the city. Why? Because of the heavy snow in the winters, the hot sun in the summers. And right now, tenants in the market are paying a premium of about $125. I think we can easily get a $95 per stall per month charge for this. Let's talk about the city, the MSA of Wenatchee. Now, what a lot of you may or may not know, Wenatchee is considered has two names. It is the Apple capital of the world. It's also the power belt of the Great Northwest. So the Apple capital of the world, I was in Thailand about 4 years ago and stumbled across a small grocery store, and in there was a large pile of boxes with the location of Wenatchee, Washington. Now, I was completely across on the other side of the world, and what do I see? Apples from my home state. Not only my home state, but a place where I own property. It's also the power belt of the Northwest. What does that mean? That is, the city of Wenatchee and East Wenatchee are the number 1 and number 2 cheapest places for electricity. This goes into the cost of living. This goes into the appeal for moving and continuing growth, population growth, and continued rental growth in the market. 40% rent to own. A huge population of veterans in the city. We love that. We love supporting veterans when we can. Population job growth has consistently grown over the last decade, with a recent surge post-pandemic. Recreational scene is second to none in the state of Washington. It's a huge attraction, right from summer to winter, fall and spring. This brings people from all over the state, not only to visit but to stay. Lastly, it's a support market for Leavenworth and Chelan. Both are luxury vacation markets. Both of those cities see an insanely high volume of people coming into those cities. Now, where do the people that service that tourist live? They all live in Wenatchee. Now, that again gives us an additional boost of population, an additional tenant base to serve. The tenant quality, a little bit more about the population itself. The population is, last I checked, is about 124,000. Median age 34, median income 69,000. So an ideal strata, an ideal band for renters, and we'll continue to see that grow. Rent to income and average credit score are great areas for us to utilize as screening criteria, and we continue to see that being a success in our existing project. Again, work, live, and play, one of the most desirable markets statewide. Why? They've got the Columbia River running through the entire city. They've got mountains on all sides, public market, and they've got incredible seasons all year round with unparalleled experiences outdoors. The city is growing. What's important to know is where the growth is coming from. Right, this is data supported from Redfin, and the majority of the inflow of residents are coming from Seattle. Why is that important? There are two main types of people that are moving to Wenatchee from Seattle. The retiree community. These are people that still want to be close to their families, that are retiring. They want a cleaner city to live in, and they want a sunnier city to live in. Again, with an easy drive back home to Seattle, back to see their family. Now, the second one would be those that have a somewhat of a hybrid work style, which certainly is still prevalent even in today's return to office environment. And one thing that we are still seeing is that we still do see quite a bit of increase in population from that return, maintaining that hybrid approach. We'll talk about the employment landscape. What are the main drivers? Who are the main employers? What are the main industries? I think that's really important for us to understand, especially relevant to the past slide. I think, one of the things that we see as the two major drivers of industry are going to be agriculture, it's going to be healthcare, it's going to be construction, small business, and again, we've got a lot of remote work still prevalent in today's market. From a health of the economy standpoint, from a job opening to job seeker ratio 1-to-1, it's indicative of a healthy, growing job market. We've seen Microsoft as another data point coming in with about greater than a $400 million investment into data centers about 15 minutes away from our East Wenatchee property. Now, what's really important for us to understand relative to the multifamily space is the residential real estate. How is the residential real estate thriving? How is it operating? Why is it important for us to know that? Well, if the affordability of buying a home is cheap enough, one would just buy a home. If the cost of housing, if the cost of acquiring and buying a home is continuing to go up, which it is similar across the country, it is going to be more and more prevalent and more advantageous to rent, right? It's just a simple financial equation. And so what we've seen is that housing prices are still escalating in the city of Wenatchee, in East Wenatchee as well, largely due to lack of supply. Lack of supply on the townhome, on the new townhomes, lack of supply on the new single families really is driving the affordability issue. In addition to obviously the growing demand. Now, the next few slides are data from a report that we've got from 2024, early 2024, and the quarter 4 of 2023 relative to vacancy. And this does incorporate some of the East Washington data. But what I do want to make mention here is that we're underwriting a 7% vacancy above market vacancy rates for not only year 1 as well as year 2. The market rate analysis, the cap rate analysis, we are projecting a 7.15 exit cap rate, which is well above anything that's traded over the last several years. Now, why is that important? That means that we've got headroom to potentially have a higher exit value. It also says that we have a conservative underwriting analysis. The sales velocity, what does this mean? What I want to point out here is the dollar per square foot. Our renovated dollar per square foot, it will be $141. That includes our Class A amenities. That includes the interior renovations, the unit conversions, etc. And at $141 per square foot, we are going to be well below the historical averages. That is critical to both strategies of selling as a individual townhome community, as well as the potential for selling out as to individual home buyers. We'll get into those extra strategies here in a little bit. Strong deal mechanics, right? Some of the things that I'd call out here is off-market transaction. We've had a great time working with the owner. We've had a long time, a couple months that we've had one-on-one conversations with, being able to go in, look at the property, underwrite, get the financials, do our due diligence in a insulated way, which has been a great experience. Economies of scale, right? This plays into the Platinum Property Management. We've got the relationships, we've got the existing assets in place. We'll be taking this to 63 units in the market. That gives us quite a bit more leverage in negotiation with contractors and with other partners in the space. Great construction age, 1977 with a 90s remodel. We've got a lot of value add in both the top line revenue as well as the cost cut initiatives, right? We'll talk about the cost overruns and ineffective management and immediate rental upside. So let's talk about the asset management, the property management itself. Gold MF will be the strategic direction setter, will be the debt and equity, will be the sales and repositioning, as well as the general contracting for all of the work on the interior remodeling, the unit conversions, and the Class A amenity package. Now, we'll work directly with Platinum Property Management, who will be responsible for the tenant management, the day-to-day operations, the property maintenance, the regulatory, and the compliance, as well as executing our strategy. It's a conveniently located asset. Here's a map of East Wenatchee. We've got the subject property, Eastmont Townhomes, just pulled off of that commercial corridor, like I said earlier. It's in a great spot. We've got parks all around us within a mile. We've got AAA groceries. We've got AAA retail all within a mile. Costco is the furthest one away at a whopping 1.4 miles away. Our owned asset, Evergreen Court Apartments, is about an 8-minute drive. And again, we've got great economies of scale and great leverage between our property management, our general, and our subcontractors as well. Some exterior photos. Here's where we're going to put that covered grilling area. We've already got the pad. We just need to go in and do some carpentry work on it. It overlooks this courtyard where we'll put the playground. The actual units themselves have a beautiful newly exterior paint job and new roof, all great windows. We'll talk about the construction in a bit. Asphalt has been repaved. Courtyard is large, which again is where we'll put the playground. Most, if not all decks, all units have either a deck or a patio. A great amenity there as well. Parking is on a 3-to-1 ratio. So for each unit, there are 3 parking spaces for currently. An aerial view from the top down. You can see here that, again, that large courtyard right there in the middle, large drive aisle really allows for any kind of vehicle, whether it's a moving van, contractor van, etc. Really well positioned on Eastmont and 6th Street Northeast. Most of the units do have, but are not advertised to have mountain view from their townhomes. Construction, again, favorable unit mix. We'll talk about the average square foot, 1,550 square feet. These units are massive. Now, the majority of these units are 1,800 square feet. Those that are 2-bed, 1.5 bath are primed, absolutely primed to be converted into 3-bed and 4-bedroom units. A couple other exciting things: new roof, new windows, electric heat, mountain view, open courtyard space, new water lines have been installed by the seller. Really, that will help prevent any additional frozen pipes, which is going to inherently reduce the repairs and maintenance bill, which has been we'll get into during the financials, but it has been a challenging point for the current ownership in terms of cost overruns. Now that work is being done already. We're excited about it. We're excited to take on the management. I know the subcontractors, they've done work for us at our Evergreen Court apartments, and they do top quality, top-notch work. Now the current unit mix converted to into the converted unit mix, the majority will be converted into 3-bed as well as 4-bedroom units. Some interior photos. What we'll do is we'll be focused on a streamlined renovation package, right? Where we have a simple and durable design with a focus on high functionality, designer finishes at a value pricing. We'll be utilizing local contractors as well as contractors that we'll bring over from the west side, suppliers as well, and we'll be utilizing a drop ship delivery and install methodology. Right? What does that mean? That means we're going to go in, we're going to demo, we're going to get each of the units prepped and ready, and before the first day of putting the units back together, we'll have a pallet shipped to each of the units that the contractors will be able to work top down in installing fixtures, finishes, cabinets, flooring, paint, millwork, etc. And that is really going to help us drive down vacancies. That is going to help us get these units rented quicker, reduce the time off of market, off lease. Some additional exterior photos: playground, dog park. This is a mock-up of what the covered grill area would look like. Covered parking we've talked about as well. I won't get into any additional detail here. Let's talk about the operational plan. Year 1. So again, what we've talked about is that this is planned for a 4-year exit, and that is what we're marching towards. That scenario assumes that we're going to be selling all 33 townhomes to an individual investment buyer, investor, and I think that we'll talk about it here in a second. We've got potential for condo conversion and exiting sooner at a higher dollar. So year 1, transition property management, right? That's going to be primary focus. Improving signage and branding, beginning to optimize our vendor contracts. We'll start the unit renovations in phases. Now, what we'll do in terms of the renovations, we'll test on a gold and platinum level, really to test the market rents. Now, what is the difference between gold and platinum level finishes? Platinum, think of tile backsplashes in the kitchen and the bathroom, as opposed to gold level, which would be a 3-inch riser from the quartz countertops. Appliances, all stainless steel across both packages. However, the platinum would also include a water line in the refrigerator. Things of that nature that really sets the two apart without much cost increase. Now, why are we doing 2 separate? Why not just go all platinum? Why not just go all gold? The reason is so that way we can test the market to see if we can get a higher than pro forma rent by going the platinum finishes. And if we can, great. On the next phase, we'll add additional platinum unit finishes. And if those perform as expected, great, we'll do it again. Now, that gives us the ability to pull back at any given time in case there's any additional softening of rents, in case there's any additional vacancies, unexpected vacancies, etc. It gives us the ability to tweak the plan. And that is important, being nimble, being agile, and being able to adjust the plan on the fly. Again, the last point in year one, we'll begin the redesign for the vacant amenity space, installing the covered parking by the end of the first year. And this last point I want to touch on is validating the condo conversion opportunity. So validating whether or not it makes financial sense, it makes sense from a risk standpoint to go in and convert all of the townhomes into condominiums, and essentially selling each one of those townhomes individually to homeowners. Now, there's a whole backdoor strategic plan set up for that, so that way we don't flood the market, right? We don't want to come online in the residential space with 33 townhomes all at once. No, that's not the way to do it. The way to do it is come in slow. Now, not only that, but what are we going to be doing with the existing assets? Do we rent them? Do we keep them vacant? Now, that whole play is going to be part of that validation process, and that is going to be a long and thoughtful process to really ensure that we're doing the right thing. The good thing is that nothing changes in terms of the operational side, right? We're still going to go in, we're still going to renovate according to plan, we're still going to add the amenities according to plan. The only thing that's going to change is whether or not we decide to stand up an HOA, stand up some CCNRs, and really dig into that condo conversion process. Year two, we'll begin distributions. We'll finish the interior unit renovations. We'll prove out that gold and platinum market rents. We'll monitor strategically and improve the property, and we'll test marketability to exit early. Year three, property is fully stabilized. We continue to monitor and maintain. We do some strategic cost reductions, payroll and advertising, in order to prep for a year four exit. Now, in year three, we'll also test the marketability for an exit to exit early. And then year four is our plan to go to market with either a sale, that's what our base case is assuming, or potentially a refinance if we're able to get all of our cash out, still meet debt service coverage ratio. Now, the financial overview, we will talk about this briefly. The offering summary will be performing at a 7.1 cap rate after the first year. We'll be stabilized in about 18 months. We'll be utilizing a credit union or local bank to get a max 75% loan to value. We'll max out on interest only terms. We'll get a fixed 5-year rate with an adjustable rate as well, and focusing on a reduction of the prepayment penalty. Sources and uses tab, the chart on the right-hand side goes through all of where we're going to be getting the capital and how we're going to be using the capital, right? So we're going to get a loan for that $5.3 million, total equity raise of 5.35 for total sources of just over 7.6. What is that going to be used for? That's acquiring the property, renovating the property, the closing costs, the legal fees, the reserve funds, the sponsor, and the general contractor fee, for a total of just over $7.6 million. The investment, the financial offering itself, investment breakdown, $2.35 million, our total raise. Class A and B ownership is on a 65-35 split for Class A and a 72-28 split for Class B owners. Now, Class A owner minimum investment is $100,000. Class B minimum investment is $300,000. Exit plan is 4 years. Again, the city is East Wenatchee, and we are looking at earlier than this in April of this year closing. Targeted investor returns is just north of 7.5 cash on cash, 20% plus on the internal rate of return. We were just short of a 2x equity multiple in that 4-year period. Here are some examples of what a Class A and Class B member share would look like in terms of return. We'll get into some more details there, but the big thing to hit here is equity multiples, 1.99 and a 2.1 for the Class A and B. The cash on cash set just over 7.5 and just over 8.25 on the Class A and Class B respectively. Distributions will be made quarterly beginning in the second year. From a rental pricing standpoint, how sure are we about these rental rates, right? I think one of the things to mention is we've got the competition that we're really considering and we're putting ourselves up against is this relatively newer construction, these newer construction townhomes that are quite a bit smaller, 1,300 square feet, that are marketed and leased up at $2,350, that are renting out for $1.80 per square foot. Now compare that back over to our property, 1,550 square foot averages, rent at $2,134 or an average of $1.37 per square foot. Now we are coming at it at a steep discount, undercutting the market there on the rental side, providing an incredibly amenitized product, great renovated property, and an incredible location as well. Summary of the income analysis. Let's talk about what our underwriting looks like in the first in those 4 years. We're going to be focused on, again, keeping vacancy low in those first 2 years through that dropship methodology on the renovations. We're going to be beginning the utility bill back and covered parking in year 2. Large room conversions in the high demand units will be complete and brought into market in year 2. Now, the break-even occupancy analysis is really, really important because it looks at what is the property break-even at when the property is stabilized. That number is 61%. So we would have to be 61% occupied or 39% vacant in order to break even on our expenses and debt in our debt coverage. Now, that is clearly not something that we're going to get near. However, again, it's important for us to know what our break-even is on our monthly hold standpoint. Income analysis, we've talked about this a little bit in the past. We'll focus on between 4 and 7 turnovers per phase. We'll do 1 phase per quarter, and we'll focus on those month-to-month tenancies. Year 2 will be the conversion, where we'll be converting those 2-bed, 1.5 bath into the either the 3 or the 4-bed, depending on the makeup and the location of those units. The income analysis, this is again just a view of that year 2 analysis. Let's look at the seller's operating expenses. This is important because, again, we talked about top-line revenue. Let's talk about cost-cut initiatives that will be focused on reductions through renovations on the repairs and maintenance. Again, I mentioned on the front end is that we did those the seller did those water lines where, a majority of this expense really is tied up in plumbing. And that work is, plumbers coming out and digging down and fixing, repairing any of the burst pipes. Those burst pipes not only are just fixes there in themselves, they're also dealing with unit damages, right? Displaced tenants. And so that causes a completely separate issue. And now with a water line that services all of the units, that's deeper under the freeze line, that's thicker and more durable than the existing code even requires, we forecast a far lower repairs and maintenance bill. Now, our target is based off of our 95-year-old apartment in the same market. So I believe that even what we're underwriting is on the high side. When we go through and do all of these renovations, we're going to be focusing on adding high-efficiency fixtures, right? High-efficiency toilets, high-efficiency appliances, LED lighting everywhere. We're really focused on reducing our operating expenses. The insurance here is absolutely astronomical. When talking to the seller, they've got umbrella coverage. They've got a lot of additional coverage that is unnecessary for a townhome of this size. We'll get into the payroll and why I think that's also unnecessary for the size of this community. We have an agent quote, American Family Insurance, for just under $9,350. Now, that's a huge savings to us, and the coverage is great. They insure our product there in Wenatchee as well. They insure our product out in Seattle. They've been a great agency to work with. The property taxes currently are just under $25,000. However, we are doubling that in our underwriting beginning in year 2 because of the step up in cost basis. This is what I mentioned earlier from a payroll standpoint. We will certainly be eliminating an expense here. Why? Because on-site management is not necessary for a 33-unit townhome community, first and foremost. Secondarily, we've got our physical property management office is 3 minutes away from these townhomes. So getting there is easy with very little effort. Let's look at our operating expense analysis. Townhomes do tend to run ultra efficiently compared to other multifamily assets, especially larger garden-style apartments that have more units above and below, as well as it's a newer vintage townhome community. Our insurance and real estate taxes will be escrowed at closing. Payroll reduction will happen in year 3, and again, we'll be focused completely on installing low flow and high efficiency fixtures to continue reducing the plumbing and electrical expense. Debt and cash flow analysis. Cap on purchase by the end of the year 4 will be operating at a 11.4% cap rate on purchase. So it'll be strong, stabilized cap rate. We'll have a 7% preferred return. In-year cash on cash is strong, and our debt service coverage ratio will be strong as well. One thing I do want to make mention here is that there will be no asset management fee paid to Gold MF in year 1 and begins in year 2 with a smaller amount, ramps up to stabilize in year 3, and then ramps back down in year 4. So when you look at it from a blended average standpoint, we are just shy of 3%. Cap rate sensitivity analysis. This is another important thing to look at. Why? Because from a cap rate perspective, let's go ahead and skip over to where we project to exit. We project our exit will be at 7.15 currently, and that's at about $10.2 million price tag that we'll be selling at. Now, the current market, a property like this would currently trade, a stabilized property would trade at 6.25 to 6.5 cap rate. So about another $1 million plus valuation. Now, in a strong market, right? A strong market we would define as 2020, 2021. Assets like this were trading for 5.5 to 5.7, which again is an additional $2-3 million. And again, this is assuming that we're selling to an individual investor and an individual buyer as 33-unit townhome community. Now, it is important to also note that our break-even cap rate in year 4 is 9.5. Now, I went back, I researched the historical trends for Wenatchee, East Wenatchee, Central Washington, and for a townhome community, for an apartment complex, for multifamily. There was no evidence that properties were trading at a 9.5 stabilized cap rate. Exit value, we've talked a little bit about this, will be increasing by year 4, 60% increase to net operating income. Historically high exit cap rate, we talked about that. Favorable dollar per townhome, right? We're looking at about $312,000 per townhome sale. Now, if we were to go through that with that condominium conversion process that I mentioned earlier in the presentation, in today's market, we could get as high as $395,000. So that's an additional 15 to 22% increase on value without really increasing our expenses. Now, obviously, there's going to be some additional expenses incurred like legal fees and survey fees, land use fees. Those are absolutely pennies in the drop, and the drops in a bucket when compared to the increased value that we'd see at the time of sale. Limited partner share, $1.6 million, assuming again this sale of 33 townhomes at the back end. What does a Class A member return look like, right? If you're coming in at $100,000 minimum, our cash flow would begin in year one, would be distributed in year two. Cash on cash average just under 7.7%, equity multiple at 1.99. Now, something to make mention is that is year three when we're fully stabilized, a full year fully stabilized. In-year cash on cash is just below 10.2%. That's incredible. Now, if we do consider the refinance methodology, we would ensure that we have a strong debt service coverage ratio and strong cash on cash returns. Class B member, this is the $300,000 class share. This is the 72-28 split. Essentially, you're getting 10% additional equity for bringing in additional capital. Now, some things to make mention here. In-year cash on cash, average cash on cash over the course of the period, over 8.25, stabilized over 11 1/3 with an equity multiple of just under 2.1. Now, two other slides that we don't need to get into right now. Project level returns. This looks at the overall project. Total member returns. This looks at the overall limited partner share in summation. And that concludes the financial analysis. Now, what I want to talk about in this next section briefly is the next steps, right? What happens now? This is an opportunity that you love. You really want to invest in it. You want to change your future. You want to learn how to invest in multifamily. Maybe you want to be an active investor. Maybe you want to be you want to go out and learn from me how we source this deal, underwrote it, how we operate it. Absolutely open to all that. Next steps, right? What is the next steps in getting involved in Eastmont Developers? The very first step is commitment, right? Let me know that you're committed. Let me know that you're committed to the deal, and you can do that easily by logging into the investor portal, starting and opening up an investor account, right? That's going to show me that you're committed to the deal, that you're committed to begin filling out any of the investor documents online, really getting to that point where you're ready to fund the account. Right now, we've got all of the documents online. We've got the investor portal all set up, ready for you to come in, fund the account today. Last step, obviously, is going to be funding. Really, right now, we've got, today is January 23rd. We've got about $1.95 million committed on a $2.35 million raise. So we do have a little bit of room left. We are trying to get to a point where we are fully funded within the month of February, early February. So if you are interested in being an Eastmont developer partner, please begin this process immediately, so that way we can make sure your share is reserved. Now, what is the easiest way to get there? Easiest way to get there is go to gold-mf.com. There's a link for the investor portal at the top right-hand corner of the web page. Following the prompts, you'll either sign in or register. That'll take you to your investor dashboard where you can click on the open offerings and continue following the prompts. Select your equity class, whether it's a Class A or Class B, and that'll take you all the way to the end, right? And again, this is an exciting opportunity that I really look forward to bringing on additional partners. I really look forward to operating this and bringing the value to the community of East Wenatchee, bringing the value to you as an investor. Last slide here, apartments under management. Evergreen Court Apartments on the left-hand side is our existing Wenatchee apartment complex. It's been an incredible asset to us. We love the partners. We love the tenants here. We love the property management company, the contractors. This has been an incredible asset for us. We love it. Brentwood Apartments, Seattle, Washington. It's been a great deal as well. We are working on stabilizing that asset right now. Now, if you are interested, again, please follow those prompts. Head over to gold-mf.com. Follow the prompts to sign up for your investor portal. Shoot me an email. Give me a call. Shoot me a text. Would love to hear from you. Would love to hear about your interest in changing your future, investing in multifamily, investing with Gold MF. I want to thank everybody for joining. This has been a great time, a great presentation. We'll take questions at a future time, as I want to make sure that we are respectful of everybody's time today. One thing I do want to make mention is that, again, this is a first come, first serve deal. And so if you are interested, please jump online. Go take a look at this. Thank you, everybody. I really appreciate everybody's time. Look forward to seeing you. Look forward to partnering with you. Thank you.